But first, soaring inflation is rocking the U.S. stock market. The Dow ended Friday in the red at 880 points down. The S&P 500 and NASDAQ also ended the week with losses. Consumer prices continue to soar. They went up 8.6% from May of last year, marking the highest increase since 1981. Inflation is particularly hurting Americans when it comes to the cost of food, housing, gas, and airfare. For more, I want to bring in Alexandra Semenova. She's a markets reporter with Yahoo Finance. Alexandra, welcome. Thanks very much for being with us. So, Americans, as we've been talking about, have been feeling these high costs across the board. The consumer price index climbed 1% between April and May. What does that sharp increase indicate?
Well, thank you so much for having me on. It's good to be here with you. Today, everyone was surprised by the consumer price index figure that came in at 8.6% over the year. This was much higher than economists had anticipated and higher than last month. Up until this point, we had been hoping for signs that inflation was peaking, but today's figures changed that picture. We saw prices elevated across all components: food, shelter, gas prices, showing that inflation perhaps is here to stay for the long term. And this, of course, complicates the task for the Federal Reserve on how it fights rising prices. First and foremost, the important thing here is that everyday Americans are grappling with increasing costs on basic items. They're going to stores and they're struggling to afford food. They're struggling to afford gas at the pump, and they're struggling to afford homes.
Yeah, and so given that, you mentioned the Federal Reserve. Is the Federal Reserve considering any new action to try and bring these prices down?
Well, investors are certainly anticipating that it will be more aggressive with the existing measures that it's taking to rein in inflation. So we're going to have the big Federal Reserve meeting next week where it sets its policy, and we're expecting another interest rate hike of 50 basis points. Markets are already pricing that in, and perhaps a hike in July as well. But today raised the possibility that the Fed might go even further and ramp up those interest rate hikes, which of course runs the risk of tipping the economy into a recession, which was spurring that sell-off that we saw on Wall Street.
Yeah, so help us understand this a bit more. So which stocks are taking the most hits? And then how does this affect Americans' 401ks? Because, when you see numbers like this, when you hear economic news like this, a lot of Americans are going to wonder, how is my retirement fund doing?
Well, at the start of the year, it was hitting, hyper-growth name technology stocks, and we saw it concentrated in that area of the market as investors turned away from, speculative assets. But now we're seeing losses across the board as more companies are reporting issues with inventories, with perhaps laying off workers, and just seeing downturn ahead. And we've seen that volatility recently and a lot of downturn in equity markets. And for regular people, this means, legitimate concerns about their retirement, about their 401k plans and their financial stability. The most important thing is right now is not the time to panic and pull out of markets. If you have a long-term investment plan, you have to stick with it. And now is a good time to be saving cash. The one benefit of interest rate hikes is that does, yield higher on savings accounts. So it's a good time for regular people to be saving up on cash and perhaps invest in long-term stocks at lower prices as, they go back up.
Yeah, Alexandra Semenova, it is not a very positive economic picture, but thank you so much for helping us to understand it a bit better. We appreciate it.